Welcome back to most exclusive video that cover your whole trading life. This video is exclusive content. We're revealing the 7 secret scalping strategies we've never shared publicly before. If you're still using outdated support, resistance methods, or lagging indicators, dismiss them now. Today, you'll learn how institutions scalp the markets with precision, small stops, and explosive profits. Let's start. Strategy 1. Liquidity sweep. See that wick? That's a liquidity sweep. When banks push price past a key level to trigger all the stop losses. Then wham, they reverse it, leaving traders crying. But we see the trap and we jump in the opposite direction. This is the strategy we use every single day. It's so powerful, it feels like cheating. Why? Because we let the big banks do the hard work. Then we take their money. What is liquidity sweep? Liquidity sweep is a strategy where big market players push prices into high liquidity areas to activate orders and absorb available liquidity. Let's see how we trade it. Find out the sweep. Price wicks past a key, high or low, but closes back inside. Confirm rejection. Look for a strong reversal candle at a level. Enter trade. Trade the reversal. Stop loss above the wick or below. Take profit. Target the next liquidity pool or swing point. Strategy 2. Market structure break. What if I told you there's a way to spot trend reversals before they happen? To get in so early that other traders think you're cheating. That's the market structure break, our secret weapon for catching massive moves. See that? Price just closed beyond the last swing high. That's not just a breakout. That's the market declaring a new reality. And while everyone else is still looking at their old charts, we're already in the trade. Why does this work? Because most traders don't understand what a real breakout looks like. They chase wicks and get stopped out. We wait for the close, then we attack. What is market structure break? A market structure break occurs when the price breaks above a previous high or below a previous low, indicating a potential shift in the market's trend. How we trade it? Find the swing. Identify the last swing high or swing low. Wait for the close. Price must close beyond it. Enter on retest. Look for a pullback plus confirmation. Stop loss, place below the new support or above new resistance. Strategy 3. Break of structure. You want to know how the big players really trade. They don't just buy low and sell high. They leave breadcrumbs, and right here, this is their secret map. See this green candle? That's not just price moving, that's big money loading orders. When price comes back to this exact zone, that's our invitation to trade with the whales. Why this works? Retail traders see random price. We see the bank's playbook. This is how you trade like the 1%. What is break of structure? A break of structure is simply the process of forming a higher high on an uptrend without first creating a lower low. and a lower low on a downtrend without first developing a higher high. Spot the boss. Price breaks a swing high or low and closes beyond it. Find the order block, look for the closest strong candle before the break. Enter on retest. Price retraces to the order block plus shows reversal signs. Stop loss below the block or above it. Strategy 4, 9 and 15 ENA Scalping. What if I told you there's a magical sweet spot where price bounces like clockwork? Meet the 9 and 15-minute ENA, the dynamic duo that turns chaotic markets into your personal ATM. See that? Price touches the 9 ENA and bounces like it's allergic to it. This isn't luck, it's the market's heartbeat. And on the 5-minute chart, it's pure scalping gold. What is 9 and 15 ENA scalping strategy? A death cross in technical analysis occurs when a short-term moving average crosses below a longer-term moving average. This signal often suggests a potential shift from a bullish trend to a bearish trend. Cross confirms trend, 9 ENA greater than 15 ENA equals uptrend. 9 ENA 15 ENA equals downtrend. Enter on pullbacks, buy dips to 9 ENA or sell rallies. Confirmation candle, wait for a pin bar, engulfing, or small candle rejection. Stop loss, below 15 ENA or above. Strategy 5, Trendline Continuation. Price hits this line like a drunk guy at a club and bounces every single time. This isn't just a line on a chart, it's the market's invisible hand slapping price back in the right direction. See that? Price taps the trend line like it's electric, then reverses like it got burned. Why? Because banks use trend lines as entry zones, and when we see it on the 5-minute chart, that's our signal to jump in. What is trendline continuation? Trendline continuation is when price respects a trend line like it's low touching and bouncing to keep the trend alive. Draw the trend line, connect at least to swing highs or lows. Wait for the bounce, price touches trend line and shows reversal. Enter with confirmation, close beyond the bounce candle's high or low. Stop loss, break of the trend line. Strategy 6, Trendline Break and Retest. The market's dirtiest trick, fake breakouts. But we turn their lies into our profits. When price breaks a trend line then crawls back to kiss it goodbye, that's our signal to attack. Look, price breaks the trend line. New traders get excited and jump in, but PSYCH, it was fake. When price comes back to test the broken line, that's when we trade. This is how smart traders profit from failed breakouts. What is trendline break? A trendline break occurs when price closes decisively beyond a trend line, often triggering false breakouts before reversing, creating our high probability entry on the retest. Break the trend line, price closes beyond the line. Wait for retest, price returns to the broken trend line. Enter on rejection. Look for a reversal candle. Stop loss beyond the retest candle. Strategy 7. 1 minute engulfing scalping. Want to make quick pips in just 1 minute? This strategy is so simple. When a big candle swallows the candle before it, we jump in for fast profits. See this long tail? That means traders got trapped. The next candle completely covers it. That's our signal to trade. Why does this work? Because the 1 minute chart shows us secrets first. Big players leave clues, we just follow them. What is 1 minute engulfing scalping? A lightning fast trading strategy where we look for engulfing candles on the 1 minute chart. When one candle completely swallows the candle before it, this signals a strong reversal, giving us a quick scalp opportunity for fast profits. Find engulfing at levels. Look for bullish or bearish engulfing at swing points. Enter immediately. Trade the next candle after confirmation. Stop loss. Recent candle low or high. Take profit. 1-to-1 or 1-to-2 risk reward. These are the 7 strategies we follow in our daily trading. Strategy 1. Liquidity sweep. Strategy 2. Market structure break. Strategy 3. Break of structure. Strategy 4. 9 and 15 minute EMA scalping. Strategy 5. Trendline continuation. Strategy 6. Trendline break and retest. Strategy 7. 1 minute engulfing scalping.